If President Joe Biden is wondering where the U.S. economy is heading in the months ahead, his team could scrutinize data on retail sales, investment and employment. Yet better insights might be found 9,800 miles away in Sydney. Australia's sizable and open group of 20 economy is often the closest thing the U.S. has to an early warning system. Not quite formally in Asia, Australia is certainly of the most dynamic trading region. The zigs and zags America experiences often show up down under first. And at the moment, Australia is flashing something approaching red for the world's biggest economy. A who's who of top economists there agree Australia is contracting. We'll know for sure Wednesday when gross domestic product data are released. But forecasts at AMP Capital investors, Citigroup, Commonwealth Bank of Australia and elsewhere agree that COVID-19 related lockdowns are nudging GDP into the red. This ups the pressure on Prime Minister Scott Morrison's government in Canberra to act boldly, both to accelerate getting vaccinations in arms and propping up growth. The most immediate challenge, though, is at Reserve Bank of Australia headquarters in Sydney. Just a month ago, traders were almost certain RBA Governor Philip Lowe's team would be tapering. It was a big deal. It would mean that a G20 nation central bank viewed as a global weathervane was moving beyond the crisis stimulus of recent years. A promising sign for growth everywhere. The expectation was that Lowe's team would scale back on weekly bond purchases. Though the benchmark cash rate would remain effectively at zero, the symbolism would have shown the RBA was finding an exit from free money that neither the U.S. nor Japan nor Europe has found thus far. Well, scratch that. Lowe won't be reaching for the brake pedal anytime soon as the Delta variant upends recovery hopes. As Fitch Solutions warns, Delta is a severe threat to Asia's growth recovery in 2021. It follows, then, that hopes for a more vibrant and normal 2022 are now increasingly in doubt. That goes, too, for China, the biggest trading nation. All this augurs poorly for Biden's economy as 2022 approaches. Not recession, perhaps, but also not a growth trajectory that produces GDP rates that exceed potential inflation. Such a scenario would not be considered catastrophic in, say, India or Indonesia. But in the U.S., which prints the reserve currency, it's a deeply dangerous trajectory. And one that would not be easy for Federal Reserve Chairman Jerome Powell's team to combat. Looked at another way, though, events in Australia suggest that inflation worries in the West may indeed be overdone. As COVID-19 lockdowns persist, and even broaden, neither demand nor pricing power dynamics are likely to return to normal anytime soon.